Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hi everyone, I'm Dongjia King, Tony. Now let's get started with today's group activity. Good evening. First, I want to let you all know that my laptop seems to be acting up a bit today. So if you run into any issues, whether it's with the video, audio, or anything else, please let me know right away if something goes wrong. If you report it here on the screen, I will definitely see it and address the issue right away, promptly and efficiently. Also tonight, I am currently using my own personal mobile data connection to connect to the internet, as a matter of fact. My internet speed seems a bit slow today, so I can't use Bloomberg in real time. That's a pretty big issue. We might have to use the web version later to explain things to everyone. So, first, let's get back to today's two main topics. The first one is, actually what I want to talk about first is that last Friday was the first trading day after Christmas. And on this trading day after Christmas, in fact, the US stock market was very quiet. So there wasn't any economic data released in the market, and there also wasn't any major corporate news. The only news was about Trump, and Trump wasn't even dealing with domestic issues, but rather handling international politics. So let's take a look at that issue in a bit. Also today, Monday, Tuesday, and Wednesday, since it's right after Christmas in the US stock market, and New Year's is coming up soon, the holiday atmosphere is still ongoing. So it seems like there probably won't be much news during this period. Let's take advantage of these 3 days. We're going to do an annual review. Now, why are we using the phrase reversing the bead curtain? Usually when we do a review, we focus on the sectors with the largest market cap, but today we're doing things a bit differently. We're going to look at the sectors with smaller market caps. But why start with the smaller ones? It's because some of these sectors have been performing well recently. So let's take a closer look. First, let's talk about last Friday. The president of Ukraine told the media that he expects this Sunday, Taipei time, which is actually early this morning, in the middle of the night, he was supposed to meet with Trump in Florida. So the message he released on Friday was relatively positive, meaning there is a possibility that the talks could be completed and that a peace agreement could be reached as soon as possible. However, what he said isn't wrong, but actually, when you look at the details, you realize it's really difficult. Why? Because he still insists on putting forward his 20-point peace plan. So why is this 20-point peace plan so difficult? The key point is these 20 points are the result of negotiations between Ukraine and Russia. There are 20 points. But the result of the talks between Putin and Trump was 28 points. Regardless, let's just assume for simplicity that 8 points have disappeared. Let's assume the remaining 20 points are known, and 8 have vanished. Now, let me tell you, these 8 missing points are the key. So this means there are ambiguities on the crucial issues, and that's a pretty big problem. Let's take a look. Of course, when this news came out, everyone thought, hey, you're releasing... Isn't this a rather optimistic piece of news? So maybe there's a turning point in the process. All right, so the market is feeling a bit more optimistic, and the expectation is that the sanctions on Russian crude oil will be eased. But there's also concern that the market's previous situation of oversupply of crude oil is still pretty obvious. So oil prices took a big dive on Friday. We've included the crude oil ETF here for your reference. But what we want to say is, last Friday's market movement was pretty much driven by this one big piece of news. For the US stock market, this was the main headline, but it didn't really affect US stocks. It only impacted the performance of US crude oil, specifically WTI crude, and also Brent crude oil, the North Sea brand. So actually, this news had a very minimal impact on last Friday's market, but what I want to point out is that today, you'll probably see a bit of a correction. I believe today's reaction will likely adjust the overly optimistic mood from last week, especially the sentiment around peace progress, because while Ukraine was expressing optimism, we saw Putin wearing military uniform visiting the front lines. Now, leaders wearing military uniforms is quite common. They all can do it, because a head of state is usually the commander-in-chief of the armed forces, the commander-in-chief of all 3 branches. It's really not that unusual for them to wear military uniforms. But the thing is, when they do put on military uniforms, it usually sends a more hawkish message. Putin's side might keep fighting, right? Now, even though Trump, who we'll talk about in a bit, has a more optimistic take, I have to tell everyone, it still looks like Russia is likely to launch what they're calling a winter offensive. This winter offensive could drag on, and only after this round of fighting is over will there be a a situation on the battlefield where it's more likely for an agreement to be reached. So this part really just means more casualties. That's all. So let's take a look here. The news that came out this morning is about Trump. In US time, he had a meeting with the president of Ukraine. Trump came out and said that there has been clear progress in the negotiations, but there is still a territorial issue, which remains a pretty big sticking point. Zelensky came out to speak and was fairly optimistic. He said that this time they've reached 100%. That is, they're close to achieving this goal. The US security guarantee for Ukraine is at a point of 100% consensus. So that's the situation. Let me just say, Zelensky is pretty optimistic, but Trump is also quite optimistic. However, his assessment of this part is a bit lower. He said that both sides have reached about 95% agreement in the negotiations. But the key issue is the land question. The future of Donbass still hasn't been decided, which means that Trump actually hasn't settled this crucial territorial dispute either. It's not like what he discussed with Putin. What's more, we need to realize that the current situation on the battlefield favors Russia, and this also gives Russia an advantage in political negotiations. Why do I say that? Before the meeting, Trump called Putin. After the meeting ended, Trump said he was going to call Putin again, so he kept calling Putin. So you can see that Putin's role here is actually very significant, much more important than most people might think. Now, here we need to mention that later on, it was said that Russia continued its attacks. The pressure from these attacks kept increasing. In other words, Russia kept attacking Ukraine to put pressure on Ukraine. The leaders of the US and Russia also maintained a reserved attitude toward a ceasefire. All right, let me explain this to everyone, because there are often reports about Russia and a possible ceasefire. These kinds of news pop up from time to time, so I probably need to talk about this here. Regarding this ceasefire agreement, my view is that this kind of ceasefire agreement is basically all or nothing. It's either a comprehensive ceasefire or not at all. It can also be temporary. But it's either a full ceasefire or there's no ceasefire at all. It's really hard to have a situation where there's like 90% of a ceasefire, you know? So that's pretty difficult here. Now, as for the point of contention, actually the Ukrainian constitution prohibits ceding territory. So for them to bypass the constitution and give up territory to negotiate peace with Russia, it's extremely difficult. And Zelensky's current idea is to hold a referendum, but the problem is that both Putin and Trump think that this referendum is just a smokescreen. Especially from Putin's side, he believes that this referendum might take 60 days, and during those 60 days, you're just preparing yourself. After those 60 days, it will only lead to even more intense fighting. So that's one perspective. What I want to say to everyone is, you might want to pay attention to this. If you're going to hold a referendum, you might as well just hold a new presidential election. Let a new president, elected by the people, decide whether to amend the Constitution, whether to give up territory, or whether to insist on joining NATO. These two issues. Actually, all of these questions need to be addressed. Only after these issues are resolved will there be a real chance for peace. If not, it will just be a kind of temporary peace. Even if this temporary peace lasts a long, long time, the problems still aren't truly solved, so there's always the risk that things could flare up again at any moment. There could always be a day when conflict breaks out again. So to be honest, when it comes to the Russia-Ukraine war, if you ask me, I think it will drag on for a very long time. I'm not that optimistic, unlike the optimistic mood in the market. I think everyone already reacted to this by last Friday, and I believe this week the market will continue to reflect how difficult it is to actually reach an agreement. All right. Now, especially if we want to give an example, military conflicts are easy to start, but hard to end. Take the Thailand-Myanmar border, for instance. On Saturday at 1 o'clock, well, according to Thailand's local time, it was around 12 o'clock, they reached a ceasefire agreement. China was involved in mediating this, and both sides agreed to a temporary ceasefire. The key point is, before this, Trump had also tried to mediate back in November. So Trump and Xi Jinping, before the G20 summit in Gyeongju, South Korea, had just reached a ceasefire agreement at the ASEAN summit. But that ceasefire only lasted for about a month. At the beginning of December, conflict broke out again. This time, when China stepped in to mediate, both sides only managed to agree on a temporary ceasefire, just a 72-hour ceasefire. Whether this ceasefire can be extended further, we don't know yet, so we'll have to keep watching. So I want to tell everyone, as long as there is military conflict, it's really easy for conflict to break out, but it's always hard to bring it to an end. So here, we're still saying Trump really wants to broker this ceasefire so he can win the Nobel Peace Prize. But whether you say he genuinely wants peace or just wants to be known for wanting peace, this is all a really difficult thing to achieve. So last Friday, there wasn't much big news in the markets, and we think this was probably the main thing that affected the whole market last Friday. That was the main piece of news. Now let's quickly take a look at this week's numbers. The most important day is probably the 30th. At night, or rather on the 31st, we'll see the FOMC release the meeting minutes. So that's probably the most important. Also, on the 31st, the number of people applying for unemployment benefits will be announced. Generally speaking, since January 1st is a Thursday this year, the unemployment benefits numbers will be released on January 4th. Normally, it's announced on Thursdays in January, but because of the New Year's holiday, the release is moved up. Also, I want to remind everyone that on January 2nd, the US S&P will release the US Manufacturing PMI Index. But as everyone knows, at the beginning of the month, the real focus on the 1st and the 3rd is the ISM Manufacturing Index and the Non-Manufacturing Index. However, because of the holidays, the ISM Index will be released later, on January 5th. So let's take a look here. Everyone should pay attention to this. This means the index will be announced later, so just keep that in mind. In theory, this week is really going to be a situation with hardly any news. Also, regarding a Federal Reserve official, actually there isn't much. He's scheduled for January 3rd and January 4th, which is Saturday. It's basically the same event. It should be the same meeting. It's in the evening on the 3rd at 11:15 p.m. There will be a speech and then another one at 3:30 on the 4th. You can basically see these as the opening and closing remarks of the same meeting. Of course, this meeting might not necessarily discuss interest rate policy. The person speaking is Anna Paulson from Philadelphia. She is taking over from Patrick Harker in July to become the president of the Philadelphia Fed. So everyone should pay attention to this. I don't think it will necessarily have a big impact because it doesn't really affect this week's market much. The biggest impact will probably be seen in next Monday's performance. Also, there aren't any corporate earnings reports being released this week. The main one will be on January 13th, when JP Morgan announces its earnings. That's on a Tuesday. That's when the new round of earnings season will really kick off. So I think at least for this week, up until then, for this new 2026 fiscal year, even though January 2nd falls on a Friday, it's generally expected that there won't be any major changes. If there are going to be any real shifts, it'll probably be after January 5th. And as for the real market movement, I think what the market is really waiting for is the earnings report on January 13th, especially the financial sector's earnings performance. In a bit, we'll talk specifically about what we might see happening with the Dow Jones. That's the situation. So for those sectors or indices that don't include AI stocks, in the short term, they might actually perform better than those sectors or sub-indices that do include AI stocks. As for the probability of rate hikes or cuts, it basically remains unchanged. Right now, since the Federal Reserve is forecasting only one rate cut this year, the market is, of course, a bit more optimistic. But let's take a closer look. Currently, the market is reacting to the probability of rate cuts this year. It looks like there's a chance of more than a quarter-point cut in June, and then by December, there's a chance of more than a half-point cut, meaning in the fourth quarter, there's a chance for a second rate cut. But will there be even more cuts? Actually, as for any additional cuts, according to the current market consensus, the probability isn't high. It's just that even though the dot plot suggests only a quarter-point cut, the market thinks it will be closer to a half-point cut. So that's basically the outlook for rate cuts. As for the US dollar, around this week, on Friday, there was only a slight change, because the main focus that day was on the Japanese yen. As mentioned, aside from the so-called verbal intervention, the Tokyo CPI came in weaker than expected, unexpectedly slowing down. This dampened expectations for a rate cut, so the yen depreciated significantly on Friday. However, let's get back to the main focus, which is still the US dollar. It saw a slight uptick on Friday, but by Monday it was basically flat. I think the US dollar is likely to remain in a sideways trend for now. However, I do want to remind everyone about something. If you look at it, the 50-day moving average is actually pressing down on it. If after this consolidation, the price can't break above the 50-day moving average, and the 200-day moving average is also trending downward, that's a bearish signal from the moving averages. But, the US dollar will probably remain relatively weak in the short term. Even if the dollar has a breakout in the short run, it still looks weak in the medium to long term. So this is a bit unfavorable, and I want to especially point this out to everyone. All right, so as for the bond market, trading has actually been pretty light. The US 2-year note fell on Friday and continued to dip slightly on Monday. Also, the 10-year note saw a small drop last Friday, and on Monday, the downward momentum increased. Also, today we want to do a bit of a review, an annual outlook, since it's the end of the year. We're taking advantage of the relatively quiet trading period to look at how the market has performed. And since Taiwan is mainly focused on technology, the market trends over the past year or so have also been driven by that sector. There was a slight push from the tech sector, but of course after November, we saw that once there was some noise around tech stocks, they started to lose momentum. So now let's help everyone get a handle on things outside of the three main sectors that the market has been focusing on. So what are the highlights? All right, this time let's unexpectedly start by looking at the smaller last 4 sectors: energy, utilities, materials, and real estate. Mainly, if we look at the S&P's performance up to last Friday and compare it to last year's closing price, up until now, last Friday, the S&P has risen about 7.8%. Now, these sectors are relatively small, so their performance has generally lagged behind. But there are 2 highlights among them. The first one is that we see on the far right, the box highlighted in green is MAR, M-A-R-T, which refers to material stocks. Lately, material stocks have been really popular. Previously, there was also a wave that followed IT, basically the AI boom, which was pretty hot. This one here is utility stocks, but utility stocks are actually wolves in sheep's clothing. We'll take a look at why in just a moment. First, let's look at the S&P Materials Index. As of last Friday, it's only up 10.4% this year, so its performance has been relatively lagging. But what I want to point out is that if you look at the period after November 20th, it's gone up 9.5%. In other words, almost all of its gains this year have happened in just this short period, about half a month, or not quite a full month, roughly within a month. So how did this surge come about? Actually, we can see there are basically 2 main ideas behind it. One is the expectation of rate cuts by the Federal Reserve. If we look at gold prices, for example, the gold ETF, this particular ETF tracks the spot price of gold and is called GLD. On Friday, it went up by 1.17% to $416.74. The key point is that gold prices have risen by about 12% this year, which is a very strong performance, especially as we can see. Actually, gold prices started from around $2,000 the year before last. Last year, they started rising steadily, and this year they've continued to climb. Now let's look at the expectations for Fed rate cuts, which are still ongoing. So as I just mentioned, the dot plot shows 1 rate cut, while the market expects 2. But some real analysts and researchers believe it could be even more than that. So as long as the final extent of the rate cuts hasn't been determined, this is very favorable for the performance of precious metals. As for the gold mining stock ETFs, earlier we talked about spot gold ETFs. These gold mining stock ETFs have performed even more strongly this year. On Friday, they rose by 1.77, and so far this year, they've gone up by 169 points. Actually, it's not 69.2, it's 169.2. Now, I want to mention something here. We see that some things are going up in price, right? And we don't have to use gold as an example, meaning not just spot gold. We could even use memory chips as an example. All right, let's put it this way. This first topic is also pretty hot in the Taiwan stock market. What we're talking about is that memory chips are going up in price. But if you just look at the price increase itself, it might seem kind of fixed there. But the thing is, yeah, sometimes when you look at Micron or SK Hynix, you wonder what's going on with them. How can their stock prices go up that much? The reason is when they start producing new, higher-priced products, their gross margins go up. So price increases are one thing, but the company's profits actually grow even more. That's why we see what's called profit growth, which in turn drives up the PE ratio. Each company's stock rises and falls differently, so we might see that gold mining stock ETFs can sometimes outperform spot gold ETFs. Now, looking ahead to next year, if the outlook for gold prices is still bullish, but maybe not as strong as this year if the increase isn't as big, when it comes to spot gold ETFs versus gold mining stock ETFs, you might want to consider the latter. Why? Because there's a profit cushion here. In this kind of gold market environment, gold mining stocks might actually have more room to perform well. Now, in addition, we just talked about ETFs, which are the simplest option. Next, we're going to talk about a few individual stocks. Maybe right now, due to time constraints and some other factors, due to the restrictions of public broadcast programs, we can only mention a few stocks, so please make sure to do your own research. The first one is Newmont. This is a relatively large stock and is also a component of the S&P 500. Among the stocks we'll mention, only Newmont is an S&P 500 component. The others you may or may not have heard of, but they aren't as large in terms of market cap. As we all know, the raw materials and mining sector, usually it's a pretty tough sector, and only during certain market conditions do they perform like they are now. So mining stocks or petrochemical stocks are generally performing the way they are right now because of these specific circumstances. Take Newmont, for example. They endured many years of stagnant gold prices, and only when prices started moving did their stock take off. Of course, Newmont is the main player here. Let me clarify. Our focus is on individual stocks, and since our show mainly covers US stocks, that's what we talk about. There are also mining stocks in the Hong Kong and European markets, but our focus remains on US stocks. We focus on the US stock market, specifically on individual stocks from the US and Canada. Since almost all Canadian-listed stocks can be bought in the US, we introduce them to you in this way. The second biggest player is Barrick Gold. Barrick Gold, right? This is also a well-established gold stock. The first two I mentioned are a bit more well-known. Next is Eldorado Gold, EGO, which is a mining stock. Its performance has actually been pretty good. Its PE ratio and profitability are relatively stable, so it usually enjoys a higher PE multiple. And then there's gold, right? Anglo Gold Ashanti, this company, its name might actually come from a merger of two companies. Now, this company has seen a particularly big surge recently. Why? Because at the end of 2022, it acquired a mining right in Egypt. So basically, after buying this new mining right, they gained access to new mineral resources. Combined with the fact that gold prices have soared this year, its stock has seen an extremely dramatic increase this year. As of last Friday, Newmont had gone up about 184%. Wow. And Barrick went up 198. Wow. And Agnico Eagle, which is a bit smaller, went up by 134. So they're all up over 100%. And as for Anglo Gold, as I just mentioned, they have new mines coming online, which combined with the current gold prices in the market, this year it went up by 295%, an extremely impressive performance. Wow. So what we're seeing here is that gold mining stocks are worth mentioning to everyone. So it's not just about looking at AI. Wow. So the main purpose of these 3 days is, well, mainly tomorrow actually, is to let you take a look at the AI sector stocks, to check them out, because it's very likely that we're seeing sector rotation lately. So you should pay attention to things that are starting from a low base. Wow. See if you get that feeling of striking gold, you know? On the other hand, silver is even more dramatic. Silver has already surged a lot this year. The silver ETF SLV as of last Friday has gone up 170% this year. Yes, silver has risen 170%. We want to point that out to everyone. Silver has been skyrocketing lately, but we also need to remind you that when something is soaring like this, if you're not already holding it, you don't necessarily have to chase after it. Maybe just watch from the sidelines for now. Why? Because this surge is a bit crazy. On the Shanghai Futures Exchange, there was already a warning issued last Friday. then it looks like all the major exchanges might take steps to raise margin requirements or use other methods to curb overheated trading behavior. Of course, what we want to tell everyone here is that there are indeed some structural bullish factors at play, and these structural positives seem likely to continue. The first one is the gold-silver ratio reflects how gold drives silver prices. Gold prices aren't weakening, so silver prices have risen. The first wave may have reached a low point, but gold still leads, so a move in the gold-silver ratio could happen anytime. There's a chance it could rise again, and then there will be room for silver to catch up and for more gains. Another thing is that silver's industrial inventory is actually pretty stable, but over the past 5 years, especially in the last 4 years, investment-related demand has already started to eat into that inventory. In other words, what's being mined isn't enough to meet market demand, so the inventory has already been drawn down for 4 years, and it's estimated that about 5 years' worth of inventory has been used up. Also, keep in mind that futures long positions can be settled with physical delivery, so in this case, this gives silver prices a strong potential for significant gains. So we saw that last Friday, SLV surged by more than 9%. Now, in addition, the silver mining ETF last Friday wasn't as crazy. It only went up by 2.67%. But since the beginning of this year, silver mining stocks have risen by 183.3%. Wow, that's also pretty remarkable. That's a huge increase, right? So let me just reiterate, this is just a bit of knowledge sharing with everyone. If you want to get involved in this area, you really need to be very careful with your risk management. This kind of market can rise quickly, but it can also fall just as fast, so be cautious. As for North America, the main silver mining stocks are Pan American Silver, ticker symbol PAAS, and then another one is First Majestic Silver. This one is also should also be part of the North American market. Then there's Wheaton Precious Metals. The first two are mainly mining companies, while the last one plays more of a trader or intermediary role. So these are the main silver stocks. Now, because the ratio of gold to silver, of course, gold stocks are still bigger, since the main mining output is still gold and silver. Silver mainly meets industrial demand, and we should especially mention this point. Should we introduce each company based on whether they mainly produce gold or silver? But the thing is, the world's silver reserves are mainly in Peru, Australia, Russia, China, Poland, and Mexico. As for mining, it's mainly done in Mexico, China, and Peru. In other words, North American silver mining stocks basically just play a minor role, kind of like just tagging along. The countries that really mine a lot of silver are mainly Mexico and China. The Inca Empire in Mexico had a lot of silverware, and China used to be on the silver standard, which everyone should be familiar with. So just a reminder for everyone, besides the precious metals being driven by expectations of interest rate cuts, which push up gold prices and then silver prices, silver itself also faces a shortage in inventory. Copper is the same way. Copper has also been rising strongly lately, because AI data centers are driving up electricity demand, and with the shortage of electricity, when you look for ways to generate more power, you end up needing copper. The same goes for silver. As we know, the main use of silver is used in energy storage devices like solar panels, and is also related to electric vehicles. They all require silver. Silver is also used in data centers, though not as much as copper, but at certain key points, silver components are necessary, so this is also a very important reason driving up its demand. As for copper ETFs, last Friday they also surged by 2.66%. So far this year, copper ETFs have risen by nearly 98%, which is an extremely strong performance. Now, when it comes to copper mining stocks, the first one we want to mention is Freeport. This is basically the only copper mining stock included as a component in the S&P index. Freeport, right? This is the main copper mining stock. But this time around, the increase in copper mining stocks, well, Freeport's rise wasn't particularly big. Let me check my notes to see exactly how much it went up. Maybe I haven't gotten to that yet. So basically, among the copper mining stocks, Freeport's increase was relatively small. Why is that? Because Freeport is indeed a major copper miner, but their copper mine in Indonesia actually had a mining accident around October or November last year. After the mining accident, the mine was affected by a mudslide, and the impact was quite severe. So it looks like in the short term, it's not possible to restore supply. You know, it's a bit awkward to say this, but if something happens at one mine, the other mines that didn't have any accidents will actually be happier. Why is that? You can't attack. Like, if I attack, then the prices all go up, right? And once prices go up, profits just shoot up like crazy. So everyone is happy when Freeport has an accident. Basically, that's what drives up all the copper prices. And on top of that, this year there's also Trump's copper tariffs. But before we get into that, let's talk about something else first. But when it comes to copper, the European and Australian mining companies, their mines aren't actually in Europe, but European mining companies are major players. Europe and Australia are both really important players in this field. China is the biggest consumer, and Chile, which originally had a state-owned copper company, is also a big player. So yeah, these are the major players, but not every single one is that strong of a player. What we need to notice is why. This time, it seems like the US is also getting involved. The US suddenly realized that as it develops its electricity sector or whatever, its copper inventory is extremely low. Although most of the copper stock is in China, the US inventory is just way too low, so there's also a motivation to restock their reserves. So as a result, we see that Freeport is still leading the way. As for Southern Copper, it's a Mexican group with a relatively high holding. So it doesn't quite meet the criteria for being a component stock in the S&P index. So even though Southern Copper is well known, it's not included. As for being included as a component stock in the S&P, the other two, Teck Resources is one of them. That's right, it's mainly a Canadian company. Previously, China tried to acquire it, but later on they were forced to withdraw and the deal was cancelled. That's Teck Resources. As for First Quantum, it's also a major Canadian copper mining company, and it's quite well known too. Similarly, it had a notable story. I think it was about 2 years ago, because of the extension of its mining rights at a copper mine in Panama. It was ruled illegal by the local court, so basically their copper mine was expropriated. The legal battle has been ongoing, and as of now, it doesn't look like they've gotten it back. At that time, this also led to a rise in copper prices. Anyway, the copper industry is really one where if someone else is in trouble, you might benefit. As long as if there's a mining accident somewhere, or if there are issues with mining rights, or if there's a coup in a certain place and copper can't be shipped out, or any of those kinds of things. Basically, whenever the supply drops, people in the industry are happy because prices go up. That's just how it is. Also, China has a mine in Simandu, Africa, and they're planning to start mining there. Once this mine starts operating, it's going to be pretty big, and the main impact will be on Australia, specifically Australian mines. China is looking to reduce its dependence on Australian copper mines. Actually, I think it's iron ore. I should clarify about Simandu. I believe it's iron ore. Sorry, I might have gotten that wrong. Let's get back to talking about copper mines. So there have been a series of mining accidents at these copper mines before, which has made the supply pretty tight right now. This has pushed up copper prices. Also, mainly in addition to the tight supply, another factor is that US inventories are also too low, so they need to replenish their stockpiles. This has caused copper prices to be quite strong recently, and it's also boosted the performance of copper mining stocks. Also, lithium batteries have also been doing very well recently, and so have lithium and stocks related to lithium batteries. This ETF isn't just pure lithium mining, it also includes stocks related to lithium battery technology. This particular stock has also gone up by 66.5% so far this year. The most important one in there is LB. I'm not sure if you all remember, but during a previous pre-market analysis I did, I recall there were a few days when I mentioned it. Around November, it was always ALB leading the way, always at the front. I think there was only one day when I mentioned that it's a lithium mining company, because, you know, as I get older, I sometimes forget these names. But this time, while preparing this topic, I managed to catch it. This is basically the only operating brine mine in the United States. Anyway, just remember, it's pretty much the only one in the US. Now, anything that the US needs and is the only one in America, people get really hyped about it. Previously, there was MP Materials and another one called Gold Medal Beggar, Intel, and now this lithium mining company too. There's also the only shipyard, my favorite. Not that I'm the biggest fan, but Ingalls Shipbuilding, the aerospace team at Ingalls. This shipyard is the only one in the US capable of building nuclear-powered aircraft carriers, and it has also been performing very strongly lately. So looking at it from this angle, when we talk about this, it means that energy and raw material stocks are still worth paying attention to. There are different implications within these sectors. So as for precious metals, it's mainly because of the topic of interest rate cuts, which has made the whole sector very hot. Gold prices have driven up silver prices, and then silver's industrial attributes have caused it to surge even more. Another reason for the sharp rise in silver prices is, for example, its own demand for electricity. Besides copper, silver is also being driven up. Plus, industrial inventories are at very low levels. Silver is also facing a shortage in exchange inventories, and similarly, copper inventories in the US industrial sector are relatively low, so there's a strong push for restocking, which is why things are looking better. Likewise, lithium mines are important too. Lithium batteries are a key technology for electric vehicles. The US also needs lithium mines, even though its electric vehicle industry may not necessarily be able to compete with China. Maybe only Tesla's electric vehicles have been relatively successful. But the thing is, lithium mines, lithium batteries are still the key components, so this is pretty important. So let's take a look. Besides precious metals with financial attributes, everyone should also keep an eye on industrial metals. If we continue to track them and they keep performing consistently, that's something to watch for. The trend of manufacturing returning to the US is actually quite interesting. Next, if you look at copper, we've seen copper prices rising, lithium going up as well, and silver is also on the rise. So what should we be watching next? For example, are iron ore stocks or iron ore itself going up? Are steel stocks rising? If we start seeing movement in steel as well, then that really signals the return of manufacturing to the US. That's when you'll really start to feel like something is happening. Of course, we're just giving everyone a direction to watch. After all, bringing manufacturing back to the US is something that many presidents have thought about, but whether it can actually be done is still uncertain. There are still variables at play, so we need to keep monitoring the situation. Another category is utility stocks. As of last Friday, they've gone up 13% this year. But if you look at the highlighted section, you'll see that from mid-September to mid-October, there was a strong upward surge. The main reason for that was actually investment driven by AI data centers. People realized that there was underinvestment in America's power infrastructure, so the issue of power infrastructure started to gain traction. Later on, because of the electricity demands from AI, you can't really rely on fossil fuels. Ideally, everything would be powered by nuclear energy. That's why nuclear energy concept stock saw a big surge for a while. Whoa. Then, after the surge, of course, what followed was the situation triggered by Oracle's earnings report, this so-called overinvestment in AI, or the idea of an AI perpetual motion machine, leading to a cycle of cross-investment. Yeah, that's right. AI stocks became relatively weak, and of course, this also dragged down the stock prices of nuclear power companies, as well as the prices of related ETFs. But we have to be clear, this downside is a fact. Nuclear power is already underway, and so are nuclear power projects. Once you get started, it's not something that will be done in just a year or two, okay? Let me say it again. Once you start a nuclear power project, it's not a 1 or 2 year thing. The so-called SMR, small modular reactors, all require nuclear reactors. Its small is only in comparison to traditional ones. On its own, it's still actually very large. It's like an NBA center. Compared to Shaquille O'Neal, he might be considered small, but if he stands next to you, he's still a giant. That's basically the idea. Building a nuclear power plant takes a long time, and you really have to wait and let it develop. If you believe in it, you need to keep following it closely, and you might have to be patient and wait it out. Nuclear power plants take a really long time to build. As for China, the infrastructure powerhouse, when they build those, even the new generation of nuclear power plants, they've been building one for 7 years and it's still not finished. It's the same story in the US. What I'm saying is the concept is right, but the incubation period is pretty long. Just a reminder for everyone. Also, uranium mining stocks, these are also related to the power shortage concept stocks, in addition to the copper and silver stocks I just mentioned. So uranium mining stocks have also been driven up. Yeah, they've gone up before too. This year, the uranium mining sector ETF has risen by about 71%. We're optimistic about this area as well. It's pretty much the same as with the others. The uranium ETF is basically the same, right? Everyone's thinking is similar. It follows the rise in electricity demand from AI, then comes down a bit. But we should mention that the demand for clean energy is still there, and after all, it probably still will be. It's an energy source with relatively low carbon emissions. For large countries like those in Europe and the US, they're not as worried about the issue of nuclear waste storage. Especially in the US, since they have a large land area, they have places to store it. So I think nuclear power will continue to develop there, which means there will be nuclear power stocks and also uranium mining stocks as well. You can keep watching these, but you'll need to be more patient. As I just mentioned, building nuclear power plants takes quite a long time. If you're really interested, you'll have to be very patient in following the progress of their construction. And in addition, well, we also see, of course, there are still some good mining companies. Here we've listed a few of the largest ones in the world. These are, I believe, they operate both in Canada and the United States. NextGen Energy is another one in the energy field. This is the only traditional uranium milling facility in the United States. Wow, and then there's uranium energy as well. There's also Centrus Energy. The first 3 or 4 mentioned above are what we call uranium miners, while the ones after that are more like processors. They take the material and process it before sending it out. Only then can it be used, so to speak. This is just for your reference. Uranium mining is actually a pretty niche area. If you want to invest in mining, you need to be patient. It really requires a long-term plan before you can expect a decent return. So next, we'll move on to the stock market section. Last Friday, the Dow Jones dipped slightly, mainly because trading was light after Christmas, so there was a bit of an adjustment. The key point is, after the Dow's slight drop last Friday, it was just a little below its closing high. I still think there's a good chance the market will continue to rise from here. AI doesn't play a big role in the Dow Jones here, but who led the gains? United Health, Home Depot, and Nvidia were among the top gainers, while the main losers were Goldman Sachs, McDonald's, American Express, Travelers, and Boeing. Let's take a look at this. I think this week the Dow Jones will probably reach new highs with a slight increase. That should be expected. Even if it's just today, I'm telling you, after the start of the year, the Dow should also hit new highs. That's for the Dow Jones part. As for the S&P, it had a slight drop on Friday, but it has already hit new highs. For the S&P, the main reason is that Nvidia has rebounded recently, which helped push it up. That's also a good performance. In addition, we saw that the top gainer for the day was Target and Freeport. Just now we mentioned Freeport. Last Friday, its increase was quite significant. And then there's Dexus. Dexus Outdoor also went up. And then on the other hand, Moderna went down. And there were 6 other stocks that dropped more than 2%. Actually, these aren't particularly big fluctuations. Overall, it's just showing a kind of sideways consolidation. This kind of choppy performance, but looking at the whole of last week, information technology and raw materials, well, information technology is still strong. After all, among the Magnificent Seven, Nvidia seems to have bounced back and regained its footing, which basically drove this performance. Also, the volatility index is hovering at a low level, and the equal weight index is basically flat. Also, we've recently found a new index. It's based on the S&P equal weight, but it also incorporates AI. If you look at it, it's actually quite similar to the equal weight index, both hovering between previous highs. From this perspective, it's possible that there will still be opportunities ahead, just following this. That is, from the perspective of sector rotation, it could move upward. In particular, we should note that financial stocks are usually the first to respond to the initial wave of corporate earnings reports. Looking at the performance in the fourth quarter of last year, financial stocks actually performed better than expected. Why is that? Well, take Morgan, for example. JP Morgan, Morgan Stanley, Goldman Sachs, these companies, these big banks, their investment banking divisions have all been very strong. In addition, there's also a significant contribution from their wealth management or asset management divisions. So the financial reports here should all be pretty solid, and as for Citi, there shouldn't be any surprises either. Then there's Bank of America, which is also pretty much expected. So it's possible that in the next round of sector rotation, financial stocks could be used to push the index higher. We just wanted to mention that again. Although we talked about sector rotation before, and it didn't seem that strong at the time, I think now, after AI stocks have hit some turbulence and are finally starting to stabilize, it'll still take some time for AI stocks to digest things. So here you can see that the low base stocks, especially those represented by financial stocks, could potentially lead the US market to keep moving upward, and this performance will be reflected in the indices. You can see this in the Dow Jones, the S&P equal weight index, or the equal weight index excluding AI stocks among these types of indices. The Nasdaq was slightly down by 0.09% on Friday, while the Philadelphia Semiconductor Index was up by 0.5%. So Basically, the biggest surprise leader was TSMC, which kept rising, and Nvidia went up by 1.02%. On the other hand, the biggest loser was Credo, and the other four stocks dropped by more than 1%. But actually, that's not much. As for the Magnificent Seven, among the Magnificent Seven, Amazon led the gains while the others were down, so on Friday it dropped by 0.34%. As for the Magnificent Seven, we'll probably save the discussion for Wednesday, especially when we talk about AI. We'll get into that then. Also, before the market opened, I wanted to let everyone know that there were some connection issues today. Let's take a look at the pre-market gains here. Let me try connecting to Bloomberg to see if I can get in. Oh, you can see it's just a black screen. Looks like there's no hope for it. Maybe it's an internet speed issue, or who knows what the problem is. Anyway, we just can't connect to Bloomberg today. I can't access the terminal. This was the situation around 6 o'clock. DVN, then APA, Halliburton, the oilfield services company, Analog Devices, and the defense industry stock L3. L3 Harris and oil stocks have actually done pretty well this year. How is Halliburton? Halliburton is an oilfield services company, and you can see Oxy is doing well too. XOM is Occidental Petroleum, XON is ExxonMobil, COP is ConocoPhillips, and CVX is Chevron. If I remember correctly, you can see these major traditional oil companies are all at the top. FMG is also one of them. This one is natural gas, so it looks like there might be some policy benefits driving it, which is why it's performing well here. Also, keep in mind that energy stocks are starting from a low base. Energy stocks actually performed together today, but their performance wasn't as strong as utilities, because in the US, power plants are classified under utilities. Energy here just means, well, energy stocks basically refer to oil companies and natural gas companies. These move along with oil prices, so as you can see, they're relatively weaker. And it's the same with real estate. The rate cuts aren't enough. The cuts aren't deep enough, so rates aren't really low. So the real estate market is still pretty sluggish. Right now, expecting the housing market to give a big boost to the US economy or to its profits just isn't realistic. So among the four smaller sectors we talked about at the end today, the main focus is actually on the first one. Some people are doing well with the original pharmaceutical stocks, and the second one is the once glorious nuclear energy stocks, which are still worth paying attention to. After all, this is more of a medium to long-term trend. But when you buy in, you need to be prepared to hold for quite a while, really for a long time. As for LB, which has been leading the decline, it's just a pullback after a big run-up, so I think it's fine. And Sandy is also just reflecting the situation. Micron and related stocks, let's put them all on the full screen. Sorry, I didn't notice that earlier. Then there's Newmont, the gold stock, which has dropped. Oracle is still dropping, but Oracle should be bottoming out soon. We don't need it to go up, but at least start forming a base at the lower end. Tesla is also down. This year, tech stocks seem to be relatively weak. It's just that it's a little after 6 now, and since we don't have the Bloomberg terminal, today we can probably only give everyone a brief introduction. Let's still jump over and see if there's any information on the web version that we can report to everyone. How did it suddenly switch to Japanese? I don't know how Bloomberg ended up in Japanese. How do you change it? It's not adjusting. US tech drags. US is basically being dragged down by tech stocks, so that's affecting the performance of the US stock market. But then silver-related stocks, the price of silver. The drop has become more volatile. We need to pay attention to this. Like I mentioned earlier, after such a big increase in silver prices, it's very likely that the market will step in to regulate. And you know, in the past, actually winning in the past has always come with some issues. Whenever silver prices skyrocket, there's usually government intervention. Yeah, I don't know why, but every time it gets to this point, it's always like this. So just a heads up for everyone to pay attention. And honestly, I have no idea why the web version just doesn't work well. Anyway, let's take a look at a CNBC news headline. European defense stocks are down because of the Ukraine peace agreement. Leonardo dropped 4% and Rheinmetall fell 2.6%. But let me tell you something. After the war in Ukraine ends, Europe's defense industry will still have to rely on itself. Why is that? To put it simply, according to the US National Defense Strategy Report, the US wants to withdraw from NATO by 2027. However, in Europe's year-end defense white paper released this year, the Europeans plan to align by 2030. So there's a 3-year gap in between, a 3-year window where there's a shortfall. Well, maybe it won't be an abrupt break. It's possible that the US will just give more money and then gradually start to withdraw. But after 2030, I think Europe will definitely have to step up and meet its own defense needs. That's for sure. So, European defense industry stocks still have a lot of room to grow, at least in the short term. Maybe they'll let it return, but in the long run, this is a strategic issue as a whole. Just wanted to share this with everyone. And then, that's about it. Let's take a look. Let's see what questions everyone has. There's no sound. Oh, now there is, I think. Wait, no, there isn't. I didn't have coffee tonight. That's a coffee mug, but I didn't throw it away. It's just filled with warm water. Yeah. Still can't get in on my laptop. It's really a boomer move. Why does the broom keep resetting? Let me tell you, it's because of the situation. Right now it's just... After this Christmas structure, there's a holiday period of about 10 days, and trading volume really drops off a lot. For some sectors that have already gone up a lot this year, there really are people who will take profits before the end of the year. Alright, so if there's a significant drop during this particular period, I honestly don't think it's anything to be truly surprised about. Unless, of course, it's a really big, dramatic crash, like a substantial drop of more than 5 full percentage points. Otherwise, you should just carefully keep it in mind. This is probably something you'll definitely have to deal with and manage. That's basically the overall situation, in a nutshell. Because there's a bit of an issue with my computer today, we might have to stop here. I can't show you the pre-market performance like I usually do. Actually, I prefer to look at the pre-market with everyone and discuss how the market might move today. So if that is indeed the case, then let us just see you all here tomorrow. As for the very important future trends and developments of gold and silver, we have actually already been contacted by the relevant regulatory authorities about this particular matter, so we probably cannot openly discuss it here. It is not considered a security in the traditional sense, so I really cannot elaborate further or talk about it in detail. But if you are one of our valued Coinyin clients, then if we hold a seminar at one of our branch offices, you're welcome to come. If you show up and want to ask me, I'll definitely explain everything to you very clearly. That's considered information for specific individuals, so at the branch we can give you a better, more detailed sharing. But here, due to some regulatory restrictions, we can only say so much to everyone. As we just discussed, if you look back, you'll see that expectations for interest rate cuts are still there. Of course, we have to be careful about things overheating, but as long as those rate cut expectations remain, the market will perform from time to time. That's basically how it is. So we'll wrap up today's program here. So, see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.